What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to another market recap video. It is May 9th of 2022. I'm actually still in Long Island for Mother's Day, and I'm actually going to be leaving tonight after this video. So I've been a little bit hamstrung with this setup that I currently have. I'm working off of a laptop. I currently have no mouse, but here we are. We just suffered one of the worst days of the trading year. And let's take a look at some of this carnage, and we'll really just assess the damage and what we can expect moving forward. Today we had the S&P 500 finished down 3.2%. We had our NASDAQ QQQ, it finished down 3.91%. So these are just colossal moves. IWM small caps, they were down 4.21%. The dogs of the Dow Jones was our best performer today. It was only down 1.97%. And then our ARK Innovation ETF, this thing absolutely got smoked. It was down 9.86% in a day. So look at these moves. On average, the S&P 500 advances about 7% per year. So just to put this in context, this is like a half of a year's move in a single day for a lot of these indices. Pretty much everything closed towards the low end of the daily trading range today, and volatility really exploded to the upside. You can see the VIX was up about 15.1%. The breadth in the market, this was complete washout breadth. There really just were no buyers on the tape today. And again, my trend model is still at a -3. So this is the beauty of just following the trend and having some sort of process around monitoring it. So long as you're not being fully aggressive in the market whenever the trend model is -3, you're going to alleviate a lot of the pain of these drawdowns, which is good. Let's take a look at our Finviz heat map, and then we'll go to the charts and really just assess the technical damage. You can see broad-based selling across the board here, and as many like to say, the generals are being shot. A lot of these stocks that have been holding up really well throughout this entire sell-off, like the Teslas, like the Amazons, like the Googles, the Nvidias, they're really just getting taken to the woodshed. Nvidia was down over 9% today. Tesla was down 9.07%. And Amazon was down about 5.21%. Even these energy stocks, which have held up the entire year, these are really giving way to the selling as well. So honestly, when I look at this tape and I see the action that's occurring in equities, when I look and see the underlying sectors and just see the broad weakness here, as well as the weakness in the crypto markets, really what it's showing this, at this point, it's obvious to everyone, just there's so much pain going on in the financial markets. And like when you think about it, if you're an institutional investment manager, your stocks are down, your bonds are also down. Those are supposed to provide you a diversification benefit. And then cryptocurrency is also down majorly as well. So the way it typically works with institutional asset management is the more money you're making, let's say you have like a 10% return, you're a few months throughout the year, you tend to get more ability to take on risk and more ability to lever yourself up in many cases. Then the opposite also holds true, where if you're facing a big drawdown, let's say your fund is down 20% and you're a few months into the year, suddenly you might be wishing that you could buy the dip, but whoever you work for is not allowing you to take more risk. They're saying, hey, you need to reduce your risk. You're not in a position where you can be taking on risk. So that's really where you get a lot of these market moves, where you might look at them at first glance. Like for instance, energy today. The XLE energy ETF, it's down 8.27%. So you might look at something like that and say, hey, that makes no sense. Like, I don't get this market. Why is it going down so much more than it really should on a fundamental basis? And it's really just, the financial markets, they're an ecosystem. And right now, as I just mentioned, there's a lot of pain going on through that ecosystem. The only way to alleviate that pain is by removing positions. So a lot of times these institutional players, they are taking off exposure, right when the drawdowns are the worst, and it really just exacerbates those drawdowns. So for us as retail investors and retail traders, we can benefit from the fact that a lot of these assets, they're getting sold off, arguably way more than they should, however you want to frame that. But it's important as well that we don't just jump out in front of the train and say, hey, this selling doesn't make any sense. All right, I'm going in and buying everything. We want to make sure that we're respecting the risk. Looking at our style factors, you can see the high beta style factor was down almost 6%. So again, same deal here. these drawdowns that we're seeing, they're actually pretty similar to what we saw during the coronavirus crash, just in terms of the magnitude of some of these moves that are occurring in the market. Let's jump over to our indices and we'll just assess what's going on there. So let's pull this over and let's go to the S&P 500. We'll start there. And as always, like these drawdowns, they're pretty insane, right? Like this is a crazy time to be an investor, crazy time to be a trader. This is the best time to learn risk management, because if you're not really exercising proper risk management, you're not taking your stops, you're going to get that immediate feedback from the market. So you can look at it one of two ways. You could get really upset and just say like, oh, the market's not going my way in the short term. Or you could just be like, hey, this is a learning experience for me, and really just take it positively. There's, you really get to choose however you want to interpret it. S&P 500, we're trading below that 4,000 mark. And in the after hours, we're getting a little bit of a bounce. The S&P 500 is up 0.27%. But today was just a really powerful day to the downside. And we were trying to hold on to these year-to-date lows. And you can see today we really just gave up the ghost and we started cascading below. Now, for a lot of investors, they wait, let's see if the year-to-date lows hold. And then as soon as they break, that's when they go, man, I guess I got to sell everything. And they end up liquidating on a day like today. One thing that I do want to point out for you is, as I'm looking at index ETFs like the SPY ETF, for instance, which is what most people use when they want to trade the S&P 500, especially on the retail side, there's pretty significant implied volatility premiums in a lot of these different assets. So that's just something to be cognizant of, that what makes this situation pretty difficult is that, hey, if you try to enter puts right now, you're entering them when the implied volatility is so expensive. But at the same time, we all know the trend is down, so you don't really want to be catching the falling knife either. So it really just adds to the complexity here. We have our downward trend line, and at this point, pretty obvious that we're pretty oversold from that downward trend line. In terms of the 20-day simple moving average, we're also pretty oversold. But yeah, the trend is certainly to the downside. Let's zoom out to the weekly chart. And look, we actually just broke a key support level today, and that is the yearly value area low of 4,055.5. Remember though, this is a weekly candlestick, right? So we still have 4 more days where this candlestick could change. So for all we know, this could be like a really vicious, devastating undercut of this yearly value area low, and for all we know, we could end up trading back above it before the week ends. We do have inflation data that is coming out this Wednesday. It's the CPI data. And we all know that the high inflation rates are really what's roiling this market. So that could serve as a potential momentum shift, assuming we get a good data point. If we get a bad data point, like obviously we're still going to be in this malaise that we're currently experiencing in the market. And we're pretty much seeing similar things across all of these indices. If we look at the NASDAQ, we're seeing the same exact thing. This one's breaking below the yearly value area low. The Russell 2000, this one is, just by far looked the worst. Wow, look at this. It's actually touching this 200-week simple moving average. So this is a good level to watch for the Russell. And then the Dow Jones, this one is also, really just struggling. This one's actually trying to hold on to the year-to-date lows. And you can see it looks like it's starting to lose them. But yeah, definitely broad-based selling across the board. In terms of my trading for today, I didn't really do a whole lot. Let's actually pull this up. I actually didn't do any trading today. Yeah, take a look at this. For options trades, I actually had to leave early on Friday, so I didn't record a market recap video. I was just noting here that my Upstart May 6th 70 strike puts, those expired worthless. I had received a credit of $2.77 for those. And I just put here, glad I did not hold through earnings. I might sell premium in this name tomorrow, given the extreme earnings reaction. So for that one, I took in a credit of $2.77, and I was able to just keep the credit, which is great. That being said, this gain that I had in Upstart, this is going to be offset, literally tomorrow with some ARK calls that I bought that now are pretty much going to expire worthless. So hey, one and one on those, I'll take it. This environment's just really challenging. And look at this ARK ETF. I mean, I could have managed this one a little bit sooner. At one point, these calls were up like 40%. And then this all just moved like very quickly. And something about it, like when I'm in Long Island, I only have like one monitor, like I'm not even working off a mouse. Like it can just be kind of discombobulating. So yeah, those ARK calls, I might just take them off tomorrow and just get whatever premium that I can out of them. So you'll likely see that on my sheet tomorrow. But yeah, this ARK, maybe if there's some sort of Hail Mary bounce, maybe this one goes back in the money, but the position expires May 20th, so I'll likely just take those off. And let's see what else we got here. So we had that ARK trade, Upstart. Yeah, and Upstart, although I collected like a max winner here, I'm glad I didn't roll those out in time because this name just reported earnings and really just got crushed. Look at this, it's trading down at $42.88 after hours. I looked at the earnings report, and granted, I'm not like a fundamental Upstart analyst, but they beat on their earnings, and then the kiss of death was they reduced their guidance. And you would think, hey, the stock's already down like 70 or 80%. Shouldn't that reflect that? But again, this is just the nature of the market that we're in, and I'm not here to argue with the market. But that said, for tomorrow's session, I might actually sell some premium in Upstart just to replace that, prior trade that I had. So yeah, for today's action, definitely, a super difficult day. I'm getting texts from people that aren't really even involved in the markets, and they're saying like, hey man, I'm getting crushed in my 401k or crushed in my IRA. So just understand, like when you're in the social media world, I really just, the world in general, if you're experiencing any market pain, and you certainly are, the only people that aren't experiencing any pain from this sell-off, I'll tell you 100%, are the people that have like $5,000 to their name. It's all in a Robinhood account, and they put, all of it in put options. Those are the only people that are like, laughing their way to the bank. But if you own a house, your house's value is likely going down. If you have cash in the bank, the inflation's eating away your cash balance. If you have a portfolio and it's in a 401k, most likely that's drawing down. So for the most part, investors are experiencing pain during a drawdown. That's really just the nature of most of Wall Street being net long. So yeah, everyone's sort of experiencing this pain to a varying degree. I currently have, I believe it's like a 41% cash balance. And yeah, in this kind of market environment, it's always like, no cash balance is too much. Like we all wish that, like, man, I wish I was in 100% cash or like whatever. But to be honest, like if you're making it by in this market environment, like this isn't supposed to be like, your human highlight reel period in the market. This is really just, as investors, we have to be able to withdraw these or, endure these drawdowns, And it's super important to just not get discouraged and not lose your motivation and really just, get ready for the next opportunity, because nobody knows when this market is going to turn, but it is going to turn. And when it does, there's going to be some fantastic opportunities. So we're going to leave off on that. With that being said, that about does it for this market recap video. Hope you all enjoyed your trading day as best you could. And I will see you all tomorrow back in PA. Have a good night, everyone.